Nkem, glad to have you join us on Closing Bell West Africa. So it's the final trading day of what's been a short trading week, actually, as a result of the bank holidays that we had. Walk us through activities for the week.
Hi, thanks for having me. Like you said, it was a short trading week, so it was largely mild across the fixed income space. In the Treasury bill space, it started off with a bearish tilt. We saw that there was a bit of sell activities in the OMO bills due to the liquidity squeeze we saw at the beginning of the week. However, OMO maturities of 305 billion came in, and that supported buying sentiment. Whilst that did support a little bit of buying sentiment, we saw the market players remain cautious due to concerns surrounding the FG's need to borrow more. There was also an NTB auction on Wednesday, where the CBN offered on behalf of the DMO 59.37 billion across the 91-day, 182-day, and 364-day maturities, and they sold all that was offered, despite the fact that we saw subscription levels over 200%. We saw stop rates for the 91-day and 182-day paper decline to 2.45 and 2.72%, but we saw that stop rates on the longer tenor bill, the 364-day, actually inched up to 4.01% from 3.85%. Going into Thursday, the market was still largely quiet and remained muted, and this is because market was focused on the MPC outcome. The Monetary Policy Committee decided to cut rates to 12.5, and we didn't see much of a reaction in the market. On Thursday as well, there was the OMO auction, where the CBN offered the 82-day bill, the 182-day bill, and the 364-day paper. And we noticed there that on the long end that was offered, rates dropped to 9.9% from 12.64% from the last OMO auction. That sent a huge signal to the market, basically showing that we are definitely in the declining interest rates environment. Coming into today, we saw pocket-sized trades in the bond space, still very largely quiet. There was a knee-jerk reaction, but that was very short-lived, but still very quiet largely.
So, Nkem, it was a short trading week, no doubt, but we also saw an impouring of figures, data, and analysis during the week. One of them, the capital importation figures. You also referred to the MPC earlier. Now, for the capital importation, we saw that report says that the bonds market were down 59.2% year-on-year Q1 20 for the bonds market as far as capital importation was concerned. And then on the flip side, we are hearing reports of pension funds managers actually dumping Nigerian treasury bills. And Kim, how attractive are T-bills as an investment class?
Given the fact that treasury pension funds, let's start on business. Given the fact that pension funds are long-term investors, it's understandable treasury bills. The treasury bill rates at 2% and 4% in the primary auction. They would look to invest in securities where they can get a bit of positive return on their investment. So they would be, I noticed as well that what pension funds are doing is selling out of the treasury bill space and going into the bond space where they can earn higher yields, and also going into the equity market where we've seen dividend yields be a lot higher than what we're seeing treasury bills offer. So it pays them more to pay in the bond space and the equity market. We've seen that happen with COVID-19 and the fall in oil prices that we saw, the general risk aversion that is happening in the global economic market. We've seen that foreign portfolio investors have pulled out of Nigeria. So that basically would also allude to the numbers that we saw in capital importation declining in the bond space for Q1, because we saw most FPIs selling out then and leaving the country.
So let's now have a look at activities going on within Nigeria's forex market, amidst the fact that the BDCs have been away from the playing field for a few weeks now, and we hear on the side conversations about the CBN trying to call market players, speculators especially, to order to retrace their steps. Otherwise, talks about 10 billion naira losses or thereabouts could be the repercussion. How has the forex market been responding to current play of dynamics that we're seeing?
Well, the forex market continues to see demand pressures as the market continues to remain largely illiquid. However, the fact that the CBN has resumed the intervention through the wholesale and retail auction, that would continue to provide stability to the Naira. The I&E market has remained undersupplied, and we've seen trades be consummated around the levels of 385 to 387 Naira to the dollar. The parallel market remains above 400 levels. However, just like you said, the CBN is speaking to the market to stop all the speculation. So we've seen a bit of appreciation in the parallel market. The last time I spoke to the market, it was about 455, but as of yesterday, early this morning, it was about 445. So we've seen a bit of appreciation in that space. So despite everything, we just believe that the CBN will continue to use policies to maintain FX and ensure that we don't see liquidity start chasing FX, and ensure that the Naira remains stable. Also, the fact that we are expecting funds from the world banks and the like would also continue to provide stability for the Naira going forward.
And what's your outlook for the market for the rest of next week?
Okay, going into next week, we expect that liquidity would dip as banks look to fund FX transaction and other buy-side activities. We have almost maturity of 150 billion coming into the market, so that would also help liquidity a bit. However, we expect that it would be a mixed market, as market players would still be digesting fully the MPC's decision and trying to form directions as to yield. We expect activity levels to move from the treasury bill space, like we said, and to see more levels in the bond space as investors would look to reallocate their FPI portfolios. Whilst we expect that activity levels will still remain mild, whilst people watch, we would see knee-jerk reactions, buy-side reactions here and there, but we expect that that would be tapered by the fact that the market would continue to question the FG's need to borrow, the lower liquidity we expect for the month of June, the sukuk that is being offered, and also everything the CBN would need to do to manage the FX. So we expect the next week would just be a mixed market while everyone tries to digest the information going around.
Nkem, many thanks to you for your time on Closing Bell West Africa. Nkem Azinge, a currency trader at UBA.